This is the first in a sort of a mini series that we're going to start doing, myself and Ryan, around small and medium-sized businesses and focusing on the key topics and issues that are coming and affecting those types of companies and small businesses. And today, predominantly, we're talking about aspects connected with Companies House, regulation and filing. Focusing initially on the Economic Crime and Corporate Transparency Act 2023, which has brought in a few new aspects and compliance obligations that companies need to be aware of. So, Ryan, you're going to talk us through a few of these today. So initially, Ryan, can we start by talking about the mandatory identity verification process? So this affects people of significant control, i.e. shareholders and directors of limited companies, and them more transparency that Companies House need over the identity of these individuals. What's going on with this?
So you're right, it's all to do with transparency.
Yeah.
So Companies House have brought in some new rules which have now been announced that they're going to be coming forward in 18th of November. So what they want to do is they want to verify the identity of individuals. So they know basically who owns the company, who controls it, who's running the company and everything behind the scenes. So what they want to do is they want to bring in an identification process, which is a little bit of time that they need to spend going through Companies House in order to put their details in, uploading passport, driver's license, that kind of thing. All the typical stuff we'd normally do for onboarding our own clients.
Yeah.
They will then get a personal code, and that personal code will then be given to us, and we'll be able to make filings on their behalf.
Okay, I see. Yeah.
Okay. We can do that because we will be classed as an authorised corporate service provider, an ACSP, effectively like an agent on their behalf, able to file these. But without that personal code, which the clients will need to do a little bit of work in order to get that, we can then carry on doing mandatory filings.
Okay, so in terms of that process of obtaining that initial code, each person will have a code. It strikes me from what you said that this is, I guess, similar to when you open a new bank account or appoint a solicitor and some of the hoops you have to jump through with your personal ID. And sometimes, as we all see these days, you'll get a link, you can upload your passport, it takes a photograph of your face, even sort of going through airports and that kind of thing does this kind of identity now. So it's a similar process.
Yes.
And from what I've read, if you have an email address and a phone and a camera on your phone and your passport or driving license, it's pretty straightforward.
Yes, I believe so. I think I've done it myself as well, and it didn't take more than 5 minutes. So it is a straightforward process, but there are always problems that you encounter. And sometimes, for whatever reason, you don't have the right information, but you are able to go to the post office and you can take your information to them and get it verified that way. So there are ways around it and different processes that we can use. Yeah,
and of course, if we have got clients that use Lovell Blake and having a phone, an email address, a camera is a problem, then we can assist those clients.
Of course we can, as we would.
But I think that the way I kind of expect this to maybe feel like it's a big issue, but for probably 95% of clients that we deal with, this is going to be pretty straightforward.
Yeah, fingers crossed, James.
Always the optimist. And on the negative side, if this is not done, when is the ultimate deadline for both people setting up? You talk about the 18th of November. I assume that's for people setting up a new company. That'll be part of the process from then onwards. But what about those that are already directors and shareholders? Is there an ultimate deadline for when this needs to be done by?
Well, this will be done before their next confirmation statement. So every year, every anniversary, there's a confirmation statement that needs to be filed. So if it's not done before that date, it will be due by their next confirmation statement. Some people may elect to do theirs slightly earlier if it's coming up close.
Yep.
If not, it will be that date when they need to do it.
Yeah, and if not done, then fines, rejection of the confirmation statement, normal times.
Usual, yeah.
Okay, so I think on the whole, we feel that this is, we can see why it's being brought in. Hopefully shouldn't be too much of a headache for most people, but we're here to help if...
I think there's a bit more red tape because there's a bit more burden on the client. It is trying to cut out fraud and transparency, which is what they're trying to achieve. So I understand why it's being brought in. Yeah. A bit of a burden on them, but yes, it's a step in the right direction.
Okay, thanks for that, Ryan. Next point to run by you is the ongoing progression towards electronic filing of all documents that we see. And currently, when it comes to the company's year-end accounts, you can still submit those on paper. They go off to Cardiff, get scanned in. Some weeks later, they'll appear on the website. But I understand that's changing over the next couple of years so that all accounts will have to be filed electronically.
Yeah, that is correct, James. Yeah, from the 1st of April 2027, it will then become mandatory that you need to file accounts using a commercial software. So at the moment, like you said, you can post them. You can also use the Companies House web filing portal in order to submit abridged accounts. That process will change from the 1st of April. So it doesn't matter what date your year starts or what your year finishes. It's just when you go to file those accounts. So if you're filing them after that date, unfortunately, you're going to need to use a commercial software.
And I think that's the key point, actually, because it's easy to think, electronic filing, I'll scan my accounts in as a PDF and email them to Companies House. That's not going to work, is it? It's commercial software is the key point here.
Yeah, definitely. Yeah, commercial software is the only way.
Yeah, okay, fine. So ultimately, if you have an accountant such as Lovell Blake, we prepare your accounts using commercial software already. So we will be set up to submit those electronically. But for some businesses that maybe prepare and file their own accounts or use a firm of accountants that doesn't have compliant commercial software, then some modernisation or change will be needed.
Yes, yeah, they will indeed.
So next up, Ryan, this is something that we were expecting to see coming quite soon, but I understand may have been at least paused, which is the mandatory filing of profit and loss accounts for small businesses. So for some time, all of our clients will be aware that they'll sign a set of accounts with us that includes a profit and loss account and a balance sheet, but only that simplified, abbreviated or filleted version with the balance sheet goes on to Companies House. So in terms of public record, it was only ever the balance sheet that was on public record at Companies House and open for public viewing. That was due to change, but now may not be changing after all. Is that right?
Yeah, that's correct. Just to remind people, if you do file anything through Companies House, it is on public record, like you say, James, and people can just go on to Companies House. They can search up a company. They can find information about it. What they can't find out at the moment is how that business has done from a profit point of view. When they're small or micro entities, they just get to see a balance sheet like a point in time. That's going to change, and a profit and loss account is going to be filed, which is seen as, I would say, most of our clients as quite sensitive information. So this may deter businesses in future becoming incorporated and may trade through a partnership or a sole trader in order to protect that information.
I think that's a fair point, actually. Look, I think there's pros and cons to the filing of turnover and profit information at a Companies House. Those businesses that rely on funding and finance, the credit reference agencies will, in this new world, be able to see a lot more information, be able to track whether companies are profitable, successful, growing, and match credit scores and lending decisions based on more information, which has got to be a good thing. But I think knee-jerk reaction from my clients was that they like the privacy of not having to publish turnover and profit and dividends, how much they draw from the company, all those types of sensitive figures, and so were sort of feeling quite negative about this process. But I'm not convinced that's the reason why the business secretary has paused the rollout of this. I think it's seen that it's an increased compliance obligation on business at a time where it's tough out there and they just don't need this at this point in time. So is your reading of it, Ryan, that this is a temporary pause? This is still coming. This is still the direction of travel. It's just not right now.
I think I alluded to it earlier about the issue of red tape. And I think the business secretary wants to take away some of the burden that businesses have. And I think this is just another layer of complexity and bringing in more detailed information on a set of accounts, which would otherwise have been a very simple balance sheet. Yeah. So for those small business, micro, small SMEs, then I think this is it's quite a burden for them. I think the sensitivity is still an issue. I think there's concerns about quoting for jobs, work, people knowing the information, knowing how much money people make, what they're doing with the profits. That's something that we've never really talked about. It's about employees, what salaries they're on, who earns what. I mean, it's sensitive information that we don't really share across one another. This is no different. This is how much someone's earned in their business. Now, some people might be successful and they might be quite proud and want to show off what they've earned and how successful they are, but most of us do not want to do that. And I think this is just putting something in the public eye that they don't really need or really want to do. If you flip it round, you could say that this is an opportunity for some businesses because there is a lot more information out there now. So when you're looking at your competitors and looking over your shoulder, what are they doing right, what are they doing wrong, how are they achieving this, you've got a lot more information you can now drill down into. So you will have, like you said, the turnover, you'll have cost of sales, you'll have your margins, you can see what they're spending on certain, IT infrastructure and everything else. You can see whether you're behind the curve or, chasing your competitors. So I think it does give a lot more information, which is a bit of a worry for some businesses, but it does create opportunities on the flip side.
And quite a lot of the work that we do these days, certainly in recent years, is around benchmarking. People want to know how they're doing compared to their peers and their competitors and other companies in their sectors. And this will, provide a lot more information. I do this as a business. What does my gross margin compare to my competitors at a similar size, at a larger size? What do I need to do to move up to the next level? So from that point of view, from benchmarking, I think this is going to be a good thing. And also, it's nothing new with larger companies because large companies publish profit and loss accounts and much, much more already, don't they? So this is only small businesses that we're talking about. And for those larger organisations that have been publishing this information for many, many years, it's just a fact of life. The employees know what turnover profits their businesses make, and their competitors do the same. So it's just bringing smaller companies into the same remit as those larger ones.
You're right, James. Larger businesses have always had to disclose this information. I just feel that maybe the smaller companies have this. There's more sensitivity about their information, maybe than a larger company. Some of them might not have very many employees, and it's really, sensitive information. But thresholds are changing all the time. We're now getting an uplift in the size of companies, the audit threshold. We may see a few more companies falling out the audit threshold. So this is effective now from 6th of April 2025 this year, and the levels have now increased so that if you're meeting 2 of the 3 criteria, you still have to have an audit, but if you don't, you will now not require an audit for years starting on the 6th of April. So typically this would be your first year end, 5th of April or beyond.
Yeah.
Some people may have changed their year ends in order to manipulate the audit thresholds, but we're now going up to turnover, 15 million, gross assets on your balance sheet, 7.5 million, and still with the same 50 employees, so less than 50 employees.
Yeah, so this is something actually I touched on in an earlier podcast when I interviewed Abby Robinson from our corporate team. And the approach on that discussion was really about how those companies who have an audit at the moment and no longer require that audit by law with these increased thresholds may opt to continue with that audit. Corporate governance and the points that come out of that, I think, is important for many companies. But from our point of view, Ryan, as business services advisors dealing with companies that generally don't need an audit by law, those larger organisations, just under 15 million turnover, just under 7.5 million gross assets that did have an audit, maybe this is the final year, one more year to go. I think there's some decisions to be made about how to reinvest those audit fees, because actually, if you're used to having your accountants in once a year and undertaking that scrutiny, you have the real flexibility to maybe focus some of that assurance work or spend a little bit more on advisory services and really look at strategy, benchmarking we touched on earlier, future planning. There's so much more that can be done. And when the freedom of audit is lifted and potentially there's a little bit more in the budget to spend on professional fees, there's some real opportunities there.
Yeah, I think you're right, yeah. Of course, for all businesses, having an audit is fundamental to them. So even though the thresholds have changed, I still think there's quite a lot of business that still require or would like to have the audit done. Corporate governance, as you mentioned, peace of mind, everything else that goes with it. So I don't think we'll see whole fire changes from the audit thresholds moving, but there is an opportunity for some where they will fall out and won't have that additional burden on them.
Yeah, I think the takeaway is, if you're a fast-growing company, you may be dropping out for 1 or 2 years. So actually, when you do restart that audit process, some of the initial checks and backdating stock takes and all the rest of it, it may well be more sensible just to keep going with that audit. If you drop out and you're likely to remain outside of audit, there's an opportunity there. But I think it's a matter of just speaking to your accountant about what the possibilities are, what that means for you, and whether choosing to have an audit is important, or whether reinvesting some of those audit fees in more strategic type work is something where you want to go down, make a bit of a cost saving and add some value to your operations as well. So I think we just sort of flagging anybody with turnover in that 10 to 15 million range and gross assets sort of around that 5 to 7.5 million range. Just have a think about this, speak to your advisors, understand when will be your final year of audit, what that means, and what possibilities there are going forward. I think, Ryan, just before we sign off today, there was I just wanted to refer back once more to a topic that we touched on last time we spoke, which was around making tax digital. Now, this comes away from the Companies House theme that we're talking about today, but I did just want to ask you to emphasise again, maybe just the key 1 or 2 points around this, making tax digital for income tax, and what you're seeing in terms of this being rolled out, who it's impacting, and I guess how quickly or otherwise those affected businesses are actually reacting to what is needed. Is this being rolled out in an efficient way, or are people burying their heads in the sand at this stage?
So just to remind you on Making Tax Digital, this comes live from the new tax year, 6th of April 2026. There is a pilot going on at the moment. If people want to join early to get a feel for what Making Tax Digital is, refer to our original podcast and get some more information on that. We also have some webinars coming up for clients to join on, targets, anyone else, professionals, just to get a bit more of an understanding of what this MTD means for people, what the filing requirements are and everything else that goes with it. There was one thing I was going to ask you, James, actually, as predominantly putting you on the spot. Well, predominantly my area of specialism is in agriculture and agricultural businesses. So it was just to get your flavour of maybe what general business is like at the moment, what the feeling is out there, with all the noise from the government. Is it a good place to be? Is business buoyant? Is it struggling?
I think there's a lot of apprehension at the moment as to what more may be coming. I think we were told in the budget last year that this was as bad as it was going to get, and it was upwards from here. And a lot of the press reports at the moment seem to be suggesting that there's more pain to come in the budget this coming November. And I think businesses generally are much more resilient than maybe you think, but what they need is certainty. So the national insurance increase, the increase in employers' national insurance was a massive issue for many, many businesses. Changes have been made, staff numbers have reduced. We can see that unemployment is up. But generally, the majority of our clients, I think, have coped with that. I think what businesses want is just certainty in advance as to know what's coming and when, and then they can deal with it. And I think this uncertainty that every week we seem to be reading a different policy may or may not be in the budget. I just do not personally, and maybe I'm getting on my soapbox here, Ryan, I think personally that is no way to run the UK economy. Businesses need certainty. They need to know what's coming so that they can prepare for it and deal with it. And business is strong and resilient, but they need to be treated fairly. So, I think we're seeing some more impressive results than maybe we'd expected. Businesses are holding money back. They're not investing. I think that the numbers are showing that already, that they're a little bit afraid of what's still to come. And if we want to stimulate investment and growth, I think businesses need to start freeing up those cash reserves that many of them have got. And they're not doing that at the moment for the reasons I've just mentioned. So first time anyone's ever asked me a question and I'm making full use of it. I think that's what I'm seeing at the moment.
You've done very well, James.
Thank you very much. Thank you. So I don't know if you're seeing the same, and as you say, agriculture mainly for you and probably focused around inheritance tax, but ultimately lots of uncertainty, and I think we need to see a line drawn under that.
Yeah. The budget being pushed back to November, as we expected the end of October, gives us a little bit more breathing space in order to do any tax planning just ahead of that time. But there's, every day there's another client that we're looking after that we're trying to, get their ducks in a row, move some assets around, try and avoid The inevitable large death duties.
That's right, yeah. And it seems that tax is here. It's not been implemented yet, but it doesn't seem like there's going to be any U-turns on that despite a huge amount of pressure. But we will see. I think it's set for 26th of November, so coverage across local bike channels will be extensive. So please stay in touch with us, follow us online, and stay in touch with what comes from that budget. But for this episode of Summing Up, the first where we've had a bit more of a discussion, a dialogue around small and medium-sized businesses, I think it's been really productive. So thanks, Ryan. We'll definitely do this again. And until next time, thanks for watching, everyone. Please follow, share, and recommend to friends and colleagues. Thank you.